Hello and welcome to the London Property Podcast. Today we're joined by Ash Talwar, founder of rentfluence, and as always, Chris Mulrey, Knight Frank Belgravia office. So guys, lovely to have you on our show again today. Just let's start off by saying, look, what does your app or your company do? What was the thinking behind it? And let's start there.
Yeah, so I started social media actually speaking about the economy markets last year, and it did well. Got a good audience, but one of the biggest problems I found in London in particular was that there are a load of retail stores that are suffering, and mainly because the independents can't afford to compete with some of the big corporations. So on the back of that, I created rentfluence, which I best describe as an Airbnb for short-term retail space, and we advertise units all across London to get business in for independent stores or larger stores, and give the opportunity for pop-ups to come into prime central London space that they otherwise wouldn't have been able to do with the expense of long-term leases and expensive contracts.
Yeah, that sounds like a really clever idea.
Thank you.
So how are you finding the commercial market? Because obviously me and Chris, we always talk about the resi market, especially prime central London. How is the commercial market at the moment?
I think the commercial market in London is quite strong. And by that, I mean things like office space. I think there was a survey I was reading earlier with PwC where they found, I think, 99.7% occupancy in the city and similar occupancies around Mayfair and all these places. And the reason for that is because there's a real push for hybrid working. So you're seeing a lot of office buildings mixed with living spaces.
Yeah.
And these are becoming quite popular. There's a big drive back to the office. And I think because interest rates are particularly high, it's difficult for landlords to compete with some of the big corporations. So what we're seeing is a lot of big corporations buying up London property. They have access to hedge it. They've hedged their interest rates. They've got access to big debt pools. So the commercial real estate in London is quite strong. Outside of London, in other major cities, I think is struggling quite a bit.
Okay, that's interesting. And what would be a typical yield to kind of be achieving in central London? What's your yields like?
I think for over the last couple of years in across the UK, you've looked at around 3 to 5%.
Okay.
In central London, in pockets, it's been slightly more. And there's two reasons for that. Number one is the currency has attracted, the lower currency, the lower pound has attracted international investors heavily into London real estate in particular. So we're seeing a lot of, I think 33% of purchases of prime London real estate from America.
Yeah.
And that's because of the stronger dollar, a big part of it. And Middle East as well benefit from that. So that's number one. And I think number two is that London real estate I see is traded more as a commodity, is more linked to equity. You can compare it more to an equity market rather than a standalone real estate market as opposed to the rest of the country. Yeah. Because of the various reasons of it being a safe place to have real estate.
Yeah. I feel like from what you were saying, commercials made a bit of a comeback since COVID. Whereas I think the prime central London market has probably gone the opposite way. Would you agree with that? Or would you say no? Like we found the market tough since COVID.
Yeah, definitely. I think the parameters are probably slightly different because if you look at the kind of commercial stamp duty rates, I mean, there's no right to rent checks, renters reform, all of this regulation. On the commercial side, it's still pretty much freed up on all of that. So you've got this institutional money that can just kind of pile in. And I just feel like the residential market is much more politically orientated. It's not necessarily an asset class that people just kind of pile the money in to make money. It's kind of more a needs-based market now. I mean, that's what the government's been trying to do over the past several years. Whereas obviously the commercial market is kind of purely, I guess, investment, nothing else. The government aren't going to change anything to that regard. But there has been some changes around the residential market. So I would say it's definitely more politically sensitive, for sure. But it's really interesting what Ash was saying about the commercial market, because we've been speaking to some big landlords who used to have a lot of old traditional legacy type buildings that they'd owned for years that were commercial, but really kind of post-COVID no longer fit for purpose. And then I guess tenants required what you were saying. They required a different type of property. And we're seeing that. They're now developed, they're built out, flexible office, working spaces, lots of communal space. It's like a very different environment. And I think, that's something that we've seen a lot of recently, which is, I guess, similar to your pop-up shop. Not super long-term leases. You can rent a space for a year, or maybe sometimes even on a monthly basis, by the desk. Really nice facilities. Everything changes.
Yeah, for sure.
Yeah.
So, Chris, obviously me and you are in the resi space. How are you finding the market? Obviously as an agent, how are you finding that it's a buoyant market, quiet market? Obviously we're leading up to Christmas now.
I wouldn't have expected it to be as busy as it has been, particularly like in the super prime end of the market.
Yeah.
I've got some figures for you here, which is over the past, let's have a look. Over the past, we've done 10 super prime sales. So super prime is in excess of 10 million. We've done 10 super prime sales over the past 8 weeks. And we've also got 6 under offer. And out of those 6, 3 are over 20 million.
Yeah.
So that's a massive improvement to where it has been kind of earlier in the year. And
we discussed those off mic. Those are all outside of Prime Central?
Those are all in PCL.
Okay, fine.
But then we've got other kind of branches outside of PCL in Surrey that have got some really big kit under offer as well.
Yes.
At 15 mil, 20 mil. So it's like, well, either these guys kind of, know something that we don't about what may or may not be coming up, or they just think that it's a really good time to invest. I think the main thing is it's a massive confidence play in London.
Yes.
Because some people are, viewing London saying, is it a good place to put your money? Well, there's the evidence of it there. Yeah. And that's a really important message to get out to people, because unless I tell the market, unless you're really close in the market, you're not gonna know that. Yeah. So that's really
confidence plays a huge factor in property. Everyone knows that. So I think like at the moment, confidence is slightly low when it comes to central London. Just looking at the things that have impacted this year, thankfully interest rates have started to creep downwards. You've had the rental bill come into place, and now we've got the budget. So there's lots of negativity around. But looking at some stats, you mentioned some positive stats. I'm going to throw some negative stats as well.
I'm not finished with those. I've got some more.
Yeah, but these ones were a bit off-putting, but I'll share them with our listeners anyway.
A bit of balance.
Yeah, just a bit of balance. So it says here that in October, overall activity in the UK market was just 2% below the same month last year. However, in the market over 1 million, activity was down by 7.9%. And then above 2 million, it was down by 16.4%. And then 18% down for 5 million plus.
Okay. Well, by the time some of these are completed, those figures are going to be changed again, probably.
I hope so. But I think it also feeds into what we've been always saying, in that the lower level market, which is the market you're pretty much in, which is the 3 million and below, is still quite buoyant. There is still activity happening. Whoever's buying at 3 million is pretty much buying because he has to buy. He's not a discretionary buyer buying a 10 million plus. So I feel like those numbers feed into what we've always been saying.
Yeah. It is a need-based market, really, predominantly. And then I guess you've got the prime market between, say, 5 and 10.
Yes.
That is slightly discretionary, but then it's the super prime end of the market is where things are really happening, which I think that's a good thing. But also my other positive point that I didn't come onto was the FTSE is now at an all-time high.
Yes.
And it's outperformed the S&P 500 this year, which is a massive vote of confidence. So I think in the UK we just need to start, don't want to say being more Trump-esque, but actually celebrating the successes of what is going on. 100%. Like, who knows that the FTSE is at an all-time high? It's not like Keir Starmer kind of goes out on the stage and said, it's a great time to invest. Look at the return that people have made if you put the money into the UK economy. Have some confidence. And people are doing it in prime, in super prime. they're doing a similar thing. They're putting money in, and no doubt, well, we can't give financial advice, but somebody's going to be on the wrong and right side of that trade.
And you also said something positive about Trump as well, which is good. So Ash, you were saying it offline as well. You were saying like, look, maybe something to take on board with regards to some of our politicians out there is maybe...
Yeah, I've been a big advocate for it because, like you said, in the US, and you go to the US, you have a very entrepreneurial mindset amongst everyone. And even if you link it back to the real estate market here, sometimes planning permission is so outdated. The regulation of getting an approval for something that can be so simple and benefit society is technically a tax in itself, because you wait so long, the property's empty, and that's going to drive up your other capital gains tax to fund these pointless regulations that take so long. Government should be stepping in. We're undersupplied on housing. We should be getting the planning approvals. We've got big corporation funding here. So that needs to be worked on. And then the achievements, like you said, need to be spoken about. We should be getting big technology corporations over here, AI companies. We should be looking at what are the next trillion-dollar industries. We should be investing in them and giving tax reliefs, corporation tax cuts. If you hire, say, 500 people in Canary Wharf and you keep it to that area, and you say you hire 500 people, well-paid jobs because it's technology and AI, it boosts the economy. It doesn't happen here. Yes. Everything's so slow, everything's so outdated, and the government need to change that, whoever's in charge.
Yeah. I actually saw something on Instagram, like it could take something like 15 years to get planning permission, or you know, if you're doing a big site, just to kind of deal with the planning permission, and then everyone getting all the other neighbours on board and everything else. Like the level of bureaucracy involved in doing anything in the UK is just so outdated. It's actually frustrating. Even like for us doing a simple internal refurb, honestly, before used to take us a few weeks. Now you have to deal with a leaseholder. You have to deal with getting consents from people within the building, party wall surveys. It takes us 6 to 8 months just to get on site for something so simple. Yeah. It's insane. Yeah. And like you say, it really cuts into our margins. It doesn't make sense to me how long things take here. Yeah.
I think we do need a bit of a mindset change in terms of, being more positive. Somebody told me an analogy, which I think is really funny, but I'm not sure if I can actually say it on here. But
we'll censor it out. Don't worry. We'll get rid of it.
Which is, if you're successful in America and you're driving a Ferrari down the street or whatever, then kind of people on the sidewalk are going to be like, "Oh, well done, man! Good on you." They kind of like celebrate that. But if you kind of drive your Ferrari down the street here, a lot of the time you'll kind of get hurled abuse at being a whatever. Yeah. You nodded to that.
I nodded to that because it's happened to me. I just never knew it was different in America. I just never knew. But in terms of market sentiment, obviously for us, I think me and Chris share the same view. Market sentiment is not great. Confidence is low. There are still very good deals to be done. Like for us, for me, if pretty much all of my investors, I'm telling them, look, now is a good time to invest. But do I see a potential to be able to exit? That's the hard part. That's the real unknown for us. In terms of commercial, where do you see market sentiment, investor sentiment in general?
I think, again, to your point, it's very politically incentivized at the moment. Nobody knows what this government's going to do tomorrow, and they know got the budget coming up. And that's going to play a big role in investment into the UK. But the UK has all of the positives of a major city. It has the infrastructure, it has the time zone zero, it has the English-speaking language as an international language. It has a lot of positives for companies to commercial investment, real estate investment, any investment really into the country. But when a government keeps changing, number one, and the regulations are unknown, then when you're spending north of 10, 20 million, you're obviously going to be cautious. And I think that's where we are right now as well with the commercial real estate market.
Yeah.
There's an American economist, I'm trying to remember his name, Mr. Laffer. Is it Henry Laffer? The guy that talks about the Laffer curve?
Tell me.
No, about you can tax something too much at the point whereby if you tax it anymore, you get less return than what you otherwise would do if you didn't tax it so much. Yeah. And he was... So there's this curve that he's kind of famous for, but he didn't invent it, but he kind of brought it back. And there was an interview with him, and he was saying that, he was asked, what would you do if you were kind of running the UK? And he was so positive about the UK. He was like, if you get the tax policy right, like how what's happening in the US now, and I know Trump saying America's running hot, and it has been running really hot. And he was like, you could do a similar thing over here, and everybody would be piling in exactly the same way. Yeah. And I watched that, and I see, there's a really positive American saying that you've got all of these assets in the UK that aren't being necessarily utilised, and I think we're kind of scared of cutting regulation if it needs to be done, or anything else, and we need some business people in power to actually take us forward. That's my view. Try not to get too political on these things.
No, but it's funny because obviously the budget entangles with the way we work, and the politicians are in charge of the next, say, 12 months of how we're going to live our lives, and how the market is going to be. So we're going to have to discuss it somehow. Yeah. So in terms of, let's go back to commercial. In terms of the way the commercial rents are you seeing an increase in terms of the next, the speculative future, or how are investors generally finding things?
I think it's quite flat at the moment. It hasn't risen significantly or fallen significantly.
Okay.
I think in central London, you're always going to have that high rents of commercial property. The demand's always there. Your Sohos, your West End, your city of London is going to always have a premium price because of the footfall and where it is and the long leases that they expect. And landlords can get 10, 20-year leases at X amount a year. I think what we're seeing is just outside, so your Notting Hills areas, just outside that main core of London, we're seeing it changing slightly, where you have a few more independent stores that perhaps have been there, A, for a while and looking to exit, or B, have signed these longer term leases that are expensive and they don't see future profits. So they want to either try and speak to their landlord and mix it up through rentfluence and other companies that offer pop-up space, or try and exit their lease. But I think the UK has one big problem, which is it's being bought up by multinationals and big corporations. When you go to your high street, 90% is owned by private equity. Your Wagamamas, your loads of other sort of Morrisons and all these places are owned by private equity firms, which leaves little scope for independence. So I do think there needs to be some government intervention there. Otherwise, every high street in the UK is going to look the same if it doesn't already.
I think it already does. Yeah.
I think the good thing about prime central London is the Howard de Walden estate over in Marylebone. Yeah. They purposefully sorted Marylebone High Street to make sure they had the independence. My understanding is they didn't want the chain stores like the Superdrug and the Boots and the Starbucks and things like that. They wanted independence, the high-end independence that's got a good spread of absolutely everything for all of the residents, with a view to lifting up the whole area, making it really desirable to live. So rather than just going for the highest paying tenants, there's a value into having that independent feel to it. And then it worked. It does. Everybody wants to live in Marylebone. It's a great area. It's really highly in demand. I think Notting Hill are probably doing something similar, because down Portobello Road, it's not an estate that owns all of Notting Hill, but a lot of Portobello Road is owned by one or two people. So I think probably a similar thing is happening there. And in Belgravia, you can see there's similar things happening there. Grosvenor are putting a key emphasis on what commercial tenants are going in. I mean, you can see exactly what's happening around there, because they've seen what's been done in Marylebone, I imagine. So that's a positive about the big landed estates. But yeah, you're right. For the rest of the country that don't have big estates that can manage a whole estate policy, then whoever's willing to pay the best rent. I don't really know how commercial works, but I get your point.
Yeah, it is an issue. And I think consumers want more for choice when they go to the high street now. That's why we're seeing landlords taking in experience real estate companies now, so like your Sixers cricket or your mini golf, because people want to go out and not just shop. They want to go and do an experience as well. So we're seeing a shift not only in prices but also trends of what they want, like you said. So that's also happening quite a lot.
Interesting. So just discussing in terms of the way we see the market going, like just as a wrap up, how would you say Central London's looking like? I know it's a really tough question to ask, especially where we are in terms of timing.
No, it's not.
It's a generational buying opportunity.
Okay. I would totally agree with that.
On the residential side.
Yeah, on the residential, I would so agree with that.
Because I've got in my head the big estates and how they think. They don't think what's going to happen in the next 6 months or the next year. They're looking at periods of kind of the next decade, the next 100 years. Obviously, an individual's probably not going to look along that kind of time frame, but you've got to look at it from a point of view in terms of a decade. Is it going to be better to buy now or 10 years out? If your view is in 10 years it's going to be better to buy than it is now, then maybe I should be on a plane leaving the UK.
I think that's a good way to look at it.
I think we're at a 10-year low. The market is down 30% in nominal terms, which will mean after pre-inflation adjusted terms, never mind the pound, you're going to be 60% down probably.
Yeah.
I don't know. How much inflation have we had over the past 10 years? We know the market is down in nominal terms by about 30% in PCL.
Yeah.
Just work out 3% per year inflation over a period of 10 years and just do the maths on that. But it's going to put you in real terms at least over 60%. Yeah. So if a market goes down by 60%, right, to get back up to where it was, has anybody got a calculator? It's got to go up more than 60% to get back to where it was.
Yeah. But that's the margin I'm looking for. That is exactly what I look for. You're saying that, but the reality is that whenever I get an opportunity, I'm looking for pretty much a 60% discount.
Yeah.
Because that's the only way I can make money on a project now.
Well, let's make the maths really simple.
Right? £1 million flat falls by 50%, and now it's 500.
Yes.
Right? How far in percentage terms does it need to go back to get to where it was?
Yeah, 100%.
Exactly, 100%. Yeah.
Yeah.
Wasn't agreeing with me. That was the correct answer. 100%.
Yeah.
So though that's how I'm looking at things. I'm looking at it from the point of view that the market's down about 60%. To get back to just where it was in 2016, it's got to go up over 100%.
Yeah. But one thing I totally agree with what you said, by the way. But I would add a few more things to say. Look, from what we're seeing is, if you have something, and I've said this pretty much in every podcast we've done this year, is if we have something that's done up well, and in a good building, in a good area, and hasn't got many faults with it, for example, like this flat, okay, you will still sell for 2016 prices, if not better.
Well, has this one sold?
Yes.
It's exchanged?
And it's exchanged for the record price.
We're waiting for it to complete.
We can wait for it to complete, but we exchange.
So he knows what he's talking about.
And also, if you look at like some of the deals that we've done, you'd say pretty much the same thing. Like, we've achieved over 2,000 square foot. We've done it.
Yeah.
But it needs to be an exceptional finish. It needs to be high level in terms of everything else.
Yeah.
It needs to tick all the right boxes, to be honest.
Yeah.
So that's where I think in this market, there is a real opportunity to make money. The market right now is pick up deals which no one else seems to be interested in. In prime locations at Belgravia is like 1,400 per square foot. That's just insane to think of it.
At the pricing that you're buying.
Yeah, it's just insane. Yeah. And like you said, it's generational. I don't think you're going to have that opportunity again.
No.
And I say that to all of my investors.
You've got to be a real pessimist.
Yes.
Or you're not going to have that opportunity. Yeah, I agree.
So that's why, for me, in terms of my advice to my investors, is go out, land bank as much as you can, and you won't go wrong.
Well, the question is,
how much time have you got left while that opportunity is still there?
Totally.
That's the question.
Yeah.
You're not going to have another 10 years.
For sure.
You're probably not going to have
another.
Like
you said, if we do, me and you need to get on the flight out. Yeah. So Ash,
the human psychology of hope, eh?
Yeah, exactly. Yeah. So Ash, over to you.
No, I mean, just to echo that, I mean, when an economy is doing not so great, prices have fallen and the eyes are off it.
Yeah.
usually the best time to go in.
Yes.
When the market's thriving,
Yeah.
there's not as much room for profits. So I think what you guys have said is totally true.
Yeah. But in terms of the commercial, we're pretty much opposite ends of the spectrum, because when we started, you said confidence is high, rent yields are quite high, or doing quite well. We're on other end of the spectrum. Would you say that's correct?
Yeah. So for real estate like this, homes, and that is definitely what you guys have said. I agree with.
Okay.
But commercial, I think it is definitely at a higher point because the transition is already turning from where it was pre-COVID.
Yes.
And we're 5 years into that already. So
Yes.
we're seeing all these big corporations buying up and leasing new huge square foot buildings right in prime locations in London. So I think that is there, and there's a lot more limited space for these type of things as well.
Sure.
There's a lot of big money moving in, I think, is a summary of what we've spoke about, and the evidence is there on that.
Guys, wrap up. Any last minute comments, words? Chris?
I'm going to go home and have see my family, I think.
Ash, last minute comments?
The UK is not as bad as people picture it to be.
Yeah.
And social media can make you think otherwise, especially
Totally.
in the news.
Yeah.
So, yeah.
Guys, it's all positive out there. It's not all negative. Thank you for tuning in. Look forward to seeing you guys on the next podcast. If you have any comments, please send it across, and we'll try and answer any questions you have.